If I might just start by asking you about the Brexit breakthrough we appear to have here. Markets have been very encouraged. The pound is strengthening. The FTSE is higher here. And yet there are plenty of political opponents lining up to say that they will vote this down at the parliamentary session on Saturday. What words of advice would you give those lining up to reject this deal?
We need to look into the implications of disorderly Brexit with no deal. In April, the fund published the analysis it has done, and it is very simple, very expensive for the UK. If there is no deal Brexit, that would cost the UK between 3.5 and 5% of GDP. And it would also cost the EU much less, some half percentage point. So it is in the interest of the UK, primarily the interest of the EU, and of course the whole world, that there is a deal. Jean-Claude Juncker said when there is a will, there is a deal. Now we have to see whether this will can really hold.
The arguments for investors largely focus around deferred investment activity by companies and suspended consumption because of uncertainty. As you look at the story unfolding, if this manages to survive the Saturday session of Parliament, do you think there is any prospect for an improvement in the GDP prospects for the UK and an opportunity to ride on the back of a strengthening pound and a stronger stock market?
Well, there are two factors to keep in mind. The first one is that the markets have already absorbed to a great degree Brexit. We have been living with it now for 3 years. So investors who have been impacted by the prospect of Brexit have already integrated this in their decisions. What is the unknown? The unknown is, would there be a deal or there would be more uncertainty, more chaos? So we have been patient for 3 years. I think we need to be patient for 3 more days. I think the impact on investor sentiment would be positive if a deal is reached. It would remove that uncertainty of what exactly that means. It is also very important to recognize that not only the UK, the rest of the world is looking for removal of this uncertainty. Why? Because we have plenty of uncertainty even without Brexit.
You have talked in the press conference just a few moments ago about progress in the US-China trade realm. The markets seem to be confused. There was an announcement of a first step. That now seems to have dissipated somewhat, that enthusiasm at least, and there's a lack of clarity. You have deeper and more insightful conversations with both parties than I do. What substantial progress do you believe has been made?
What we understand from both sides, I actually started the day with Governor Yi Gang of China. I met with Secretary Mnuchin yesterday. What we hear is very constructive attitude and a commitment to identify remaining differences and then focus on those. In other words, cash what is already agreed, and apparently on a number of issues there is 100% agreement or close to 100% agreement. And if the focus is on the remaining differences, there is a very good chance that an agreement can be reached. The interest in agreement is motivated by a very simple, common objective. Harmful for the economies of both countries. More harmful to China for obvious reasons. China is more open towards the US and more dependent on the trade relations with the US, but also negative for the US. We have done a calculation on what exactly are we talking about, what is the impact, and it is quite significant. By 2020, tariffs already imposed or announced would shrink global GDP by 0.8%. That is the equivalent of the whole economy of Switzerland. So the motivation to find a pathway to a deal comes from the fact that the world economy is slowing down. We are in a synchronized slowdown. 2 years ago, we were in synchronized upswing. So you can take more battle attitude when the world is doing well, and one has to be more careful when this is no more the case.
Is there a time issue in your mind here? It seems that we are still waiting for ratification of the Mexico-Canada-US trade deal, concern that could get tied up in the 2020 election campaigning. If there is no significant progress soon on a China-US deal, that also could get lost in the US 2020 election race.
But you put it so correctly in your question, the sooner the better. And the sooner the better, not only because of the political environment in the US, the sooner the better because we are in a world environment that is too much loaded with uncertainty. We have not only trade uncertainties and Brexit, we also have geopolitical uncertainties. We also have technology creating disruption in the world economy faster than it has been the case before. So any agreement that is close to being reached, better to wrap it up and move forward. And in that sense, from the fund, our advice has been always talk to each other and even better, agree with each other.
Let me flag up two issues around financial markets and stability that you've raised here this week. One is the high level of corporate debt as you see it, $17 trillion potentially exposed to recession. That could be dangerous. You've also flagged up the risks around interest rates and investors who are stretching for yield right now in parts of the market that may be illiquid and they don't understand. Is it fair to say that there are now more risks in the financial economy than there were in 2007, 2008? How do you read it?
That I would be cautious not to go that far. I do believe that after the 2007, 2009, the period of time of great financial stress for the world economy, a lot has been done to improve the protection of the financial sector. And some would even argue too much has been done in that regard. I wouldn't go that far either. But what we also have to recognize is that we are faced with a rather unique situation of low for longer interest rates and even negative interest rates. That inevitably creates two risks. One is the search for higher yield by taking higher risk. This is already materializing. And two, it is the lack of investments where they would matter the most. The financial sector not being able to boost growth